Okay, hey everybody. I'm actually just a real quick note. I'm actually over in Las Vegas now. I'm just flying back home in a few hours. And no, I haven't been gambling. The reason that I've been over here is I've been desperately in need of a chief operating officer so that I can just focus on what you guys pay me for. And it's been an extremely difficult thing. I belong to a group of entrepreneurs that they're all in kind of discrete businesses, some actually in the same business as me, and we all kind of work together. Um, and it's really constructive group with people that are super, super smart. And um, one of the refrains that seems to be pretty constant with other online businesses, which most of these, though not all of them are, is we need somebody who knows what the hell they're doing and can get everything done so that we can just do what we're supposed to do. So this is actually a common issue in my space. And I apologize for any inconvenience or lack of quality that anybody's getting or you feel like you're getting from the business. And all I can say about that is I am doing the best that I can. And I have a vision for this, and it's frankly, it's nobody's business what it is. So I don't feel like I need to explain myself other than just to say that I actually interviewed a company, not just one person, but a company who's probably going to be able to take over the whole thing, so that again, I can just focus on content, which is what my passion is. So it'll probably take a few months for them to actually kind of get dug in because the first thing they're going to do is take stock of everything and they don't want my input. They just want to look at it. So, um, anyway, that's why you will see every once in a while an alteration in schedule. And it's again, it's just because I've got to get this thing going the way that I know that it can be. Also, just one last thing, and then I got to get to what I'm doing here. I'm going to be teaching another webinar for the Mentor Trading Mastery course that I really kind of screwed up prior to the holidays. It was just too long and all that kind of stuff. So you'll be getting an email on that. If you want to come, great. I think you should because I'm actually teaching a lot of things. It's not just pitching you on some upcoming class and any of that stuff. That's your choice, not mine. You know, you get to decide how you want to prosecute or push your trading career forward. But I just want to let you know that that's coming, and I'll probably wind up doing it again after that. So it's just part of the process of doing a new course. Um, and That's all I have to say about that. So let me get off the screen here and uh, and let's get on with this thing. Okay, so I mentioned in my morning note the last couple days, not so much on the S&P, not at all on the S&P, but like on the Nasdaq 100, you'll notice that the close is higher than the open, even though this technically kind of closed down. This yesterday was what's known as a hammer pattern, where the stock gapped down and then traded lower, but then reversed course and ran right up to the top. And so it kind of looks a little bit like a hammer, which is why it's called a hammer. Um, and that actually, so it kind of makes sense that we're up again today. So I still think, I guess I'm just not creative. I just like to stick with the stuff that's working. I still like some of the mega cap stocks and the semiconductor stocks. And by the way, one thing that I've pointed it out a few times lately, but frankly, I think it bears repeating. And I actually think that it's important for each trader who's not completely happy with your performance. If you're completely happy with your performance, then then you're just subscribing here, and I'm glad you are, for stock ideas. That's it. And that's a time saver. You're going, well, let me see what Fitzpatrick and McGregor have to say. Let me see if I can get some new stock ideas because I'm crushing it. And so any time saving that I can benefit from, it's all good. It just, it improves my quality of life. So that's why you're here. If on the other hand, you're struggling, you're not happy with your trading results, you feel like you could be doing better. This is what I've learned. And it's actually taken me a lot longer in hindsight. It's taken me a lot longer to learn this, to really truly understand it. I'm just, I might as well be talking to you. It's taken me a lot longer to truly understand this. Because I've been just so busy focusing on different aspects of trading. Okay. This is what I'm talking about. It takes that long. I just clicked the mouse twice. Watch, buy, sell. It takes only a fraction of a second to make a trade. And when people say, "Oh, they're traders," you have to understand that there's a lot more to it than clicking a mouse. And listen to me, because this is important. There's the time that you spend before you make the trade, and because you're looking for the trade, you're waiting for the entry, and you're applying what you know about trading. By the way, sorry about the flicker. I don't know what's going on with my laptop. But so you're applying what you know, and you're waiting for the entry. Okay, fine. So you take the entry. Hopefully, it's a good one. Now is when the money is made. Okay, the initial money is made when you buy a stock, because if you're buying it right, you're going to have a reward that is greater than the risk that you're taking. And that's based on how you trade. It's something that you got to be mindful of. But then and by the way, when I say the money starts being made at the entry, this is what I'm talking about. If you buy a stock wrong, like you get the can't help it, and you just got to chase the stock, a lot of times that's going to turn out to be the high. That'll be the high. That'll turn out to be the high of the day. Okay, I had to pause for a second because, as I mentioned, I'm in Vegas. I'm in a damn hotel room, and my breakfast just came, so I'll eat it a little later. Anyway, so what I was saying was, if you buy a stock wrong, like you get too exuberant, and it could be one of two things. All right, you could be chasing a stock, and I'll show you a couple kind of tricks here in this video later to keep from doing that, but. You can either be chasing a stock, which means that you're effectively buying it from other traders who are now taking profits. And so the money can actually start being lost when you make a bad entry. Similarly, on the downside, if you're buying a stock because you go, oh, it's gone down far enough, so I'm going to go ahead and buy it now and get the big move. If you're wrong about that, because the stock is going down for a reason. If you're wrong about that, then you're going to start losing money that way too. So the money starts being made when you make a good entry. Okay. At that point, that is, in my mind, the most critical part of your trade. And it is, how long do you hold that trade? If you're patient, and let's say you got other crap to do, so you're not banging around stocks all day long. And if you are, that's fine. That's your crap. That's what you're doing. And that's okay. As long as you're making money. But if you're holding the stock for a longer period of time, think about it this way: money made for work output. How much work are you doing on a stock like an NVIDIA or a Microsoft or, any of the big ones that ran so much last year? How much work are you doing to make the money that you're making? And the answer is not very damn much, because you got a good entry, you bought the stock, and maybe your work with relation to that position is every once in a while you want to go in and buy some more to build up your position size. So, but essentially, though, when you're holding a stock for a longer term, the work that you're doing is none. Like it's a total, it's a free trade when it comes to the work put in. When you're trading that same stock, though, shorter term, buying and selling, buying and selling, buying and selling, each of those actions is following a decision. You're making a decision to buy this stock, or I'm selling it now, and all that. And it's typically not going to be a snap decision. You're thinking about it. You're watching it. I mean, how many times have you been fixated on the activity of a stock first thing in the morning, or you're monitoring it kind of like all day long? I hope that that's happened to you, because if it hasn't, then I'm the only dummy that it's happened to, because that has happened to me a lot. And so what I have learned is I need to pick my time frame before I even make the trade. And then that keeps me honest. It keeps me really honest. And so I'll get back to what I was saying at first. And that is that there are some things that I've learned about trading that I kind of learned a little bit later in my trading career. And hopefully me sharing this with you will allow you to learn it a little bit earlier if you haven't been trading as long as I have. And that is, learning to trade is easy. It actually is. There's not that much to it. It's complicated. I could teach you how to trade a particular style. Oh, here's my room service again with coffee. Finally have coffee. So, the art of it's not, forget about the art. That's kind of what I'm getting to. The active trading, learning how to analyze charts, learning how to look at moving averages, any number of indicators that you look at, just so many different things. I could teach all that stuff to you in a day, maybe two maximum. If I'm just saying, okay, I got to teach exactly what goes into trading, what gets you from opening up your chart software to where you're actually exchanging your money for stock, or vice versa. What all goes into that? It's really not that much. And if you stop and think about the winning trades, the real winning trades that you've had, really go through them and look at them, you will find that there were just a discrete number of things, maybe 6 different things that you looked at, that gave you the sense that, okay, I need to buy this stock right now. You didn't look at 19 different indicators and 82 time frames and pour through the fundamentals and look at the tick chart and just all these different things that you could be if you wanted to be distracted by things. But you looked at a half a dozen things and they all lined up, and that's when you decided to make your trade. Okay, so if the active trading and looking at charts and analyzing and finding stocks that you want to find, if it's that simple, not easy, but if it's that simple, then why do we have such a hard time making money? Why do we always look back at a chart and say, oh, that's exactly where I should have bought. I would have bought there if I'd seen it and all that. Why do we have such a hard time with that? And I'll tell you why. Because we're not focusing our energies on the most important act of trading. And that's right up here. That's the mind. And you think about this for a minute, and I'm not going to dwell on this, but I'll just say this. Your mind is what sabotages you. You get the, oh, this time is different, or you make a decision that you're going to buy a stock, and then hold it for a long period of time. And then for whatever reason, 2 days later, it's up 3%. And you say, well, I'll just take profits on this because it looks like it's going to pull back. Stuff like that. Or you have, and I've had this issue before, you have an even number in your trading account as far as your account balance. Oh my gosh, I'm just 50,000 away from $1,000,000, and that's what I want. Or I'm 2,000 away from $100,000, whatever your metric is. And so what happens is you start fixating on that number, trying to hit that number or maintain that number or something. You start fixating on that number, and the charts don't give a rip about your number. Nobody cares about your number except you. And what you're doing is you are taking your interest, and I get the numbers. I totally get it. But you're taking where your interest is going, and you're moving it actually away from the process of trading, and it's into some psychological world that only you know what that is. And when you do that, you completely erase any edge that you have. You become just another knucklehead playing the stock market. So I want you to really be thinking about that and try to focus on managing your mind. And I think you'll find that when you do that, the money's really going to follow. And you will, again, ultimately find that the real guts of trading come from mastering your own emotions. And think about it this way. Let's say you have built the fastest car in the world. It's the most high performance, amazing car. It's awesome. And you think, wow, this is gonna really be a great performer, but it keeps crashing into walls. It won't start, et cetera, all this stuff. So how could that be? Well, I'll tell you exactly how it could be, because you got a crappy driver. Maybe you don't even have a driver. Maybe you're on like full self-driving or something, full self-crashing. Or maybe you just have a driver who doesn't know what he's doing. Or maybe you have a driver that's so emotional that he gets or she gets freaked out every time there's a turn in the road. What you're doing in your trading is, if you're focusing solely on charts and things like that, if that's your sole focus, what you're doing is you're building a great car. You can get all that stuff down. But unless you're focusing on the driver as well, you don't have a complete trading system. See, you have to insert yourself into that trading system. And if it's a really good system, then the act of inserting yourself into that trading system ultimately comes down to this. I've got a good trading system. I'm just going to work the system. So you make a conscious decision to remove yourself from your trading strategy or your trading process. But it takes a conscious decision to get to that point. If you're not able to get there, I'm just telling you, you'll always struggle. That's it. I struggled for years and years and years. And I was writing about trading when I was at Real Money. I got a lot of positive feedback and people asking for more and this and that and the other thing. But writing about trading is way different than trading. I'm just telling you, it's a completely different thing. So that's all I really have to say about it at this point. And I hope this has been helpful to you. And hopefully you're not saying, yeah, but just tell me what to buy today. Okay, so with that said, let me see if I can tell you what to buy today. I don't mean that in a bad way. I'm saying that ultimately, like, this is where we want to be. We want to go like, how the heck are we going to make some money? Okay, so anyway, we're still seeing now the market's been open almost 70 minutes, and you're seeing intraday here. It's pretty good action. Let's see what the spider's doing. Doing okay too. I don't care about the Dow. I really don't. So I'm not even going to look at it. But then we look at the mid caps, and those are the small caps, and we look at the mid caps, and they're doing what I had mentioned. No, it was on it was on Sirius XM Business Radio or whatever, that the mid and small cap stocks are kind of pulling back a little bit. They're doing okay, but the fact that they're not just continuing to move lower in a big way is actually kind of bodes well for the market. One thing that I was looking at as far as the mid caps go, and there's a bunch of them, was I wouldn't make this trade right now. I'd just watch it, but I just happened to see this stock and it looks like it's coming out of a base. You can see we just had the nice crossover there. So definitely something to keep in mind. It's a, $3.64 stock. But it wouldn't surprise me if it breaks out and moves even more. It runs up to $5. So just a thought. So the semis continue to work. Now, notice how choppy these are. It's pretty choppy. But if you just took out the price and here's a little trick for you. I call it a pro tip. Okay. If you completely removed the price and you even did this, here. Where are we going here? Okay. You took out the price, and we can take out the Bollinger Bands. I'm not going to keep going here, but I want to prove my point. Which direction is this stock going? It's absolutely going higher. The 200-day is moving higher. The 50 days moving higher. The 20 days moving higher. Even the 8-day is moving higher. The Bollinger Band swings are moving higher. So why would you sell this stock today or tomorrow or whenever? You would sell this stock immediately because you have a shorter term mindset, and I want to take some profits. I've had some crappy trades lately. I'm up 3.5% here, so I'm going to book the profits. Okay, well, fine. If you did that here in December, or if you did that in November, then you've missed out on this. And this is the SMH. It's not going to be a big mover. It's a semi ETF. But I hope you get the point. You have to decide what your time frame is. Now, look here at a 5-minute chart, or we'll say a 30-minute chart. This is a completely different situation here. If this is what you're looking at, I would absolutely be selling today. It's a nice squeeze here. Again, it's a 30-minute chart. Nice squeeze here. And then finally a breakout. Oh my gosh, but that's up really high. I'm going to go ahead and take some profits here so that I want to make sure it doesn't come back and force me to give away all of my profits. So time frame matters, but also if you're just focused on the action, like the candlesticks, if you're just focused on the price action, you can miss the overall trend. And they say you miss the forest for the trees or something like that. I'll just say this: if you keep focusing on the leaves, you're never going to understand that there's a big mighty trunk underneath there, all those leaves that you just need to leave alone, and it's going to be fine. So anyway, hopefully this kind of stuff helps you. I know I don't go into to this kind of stuff a lot, and maybe I should a little bit more, because I'd like to think that we're more than just a stock picking website here. So my focus is truly on helping people that are members become better traders. I'm not looking to start a fan club. I just want people to trade better. And when people trade better and I see it in the forum or I'll get emails, That's what makes me freaking go to Vegas when I'm sick. And when I do all the other things, it's because I'm fulfilled in what I'm doing. So anyway, NVIDIA, we're doing well. This is still on our active trade list. We're in at 506. So now I'll show this. Now, what I've done, you see, like we've been all over the map here, but what I've done is I've kind of tipped the hat to everybody. If you're a long-term trader, then and you're kind of looking at this, if you're a long-term trader, I mean, you can keep your stop at 450 even if you want, if you're a long-term trader. But I'm saying when it's up $73 or not quite that much, but when it's up a lot from where we bought, at some point you want to just set your stop at break even. Not too quickly, because if you do, you're just going to get stopped out on volatility. But for short-term traders, just keep it below the 8-day moving average, and I think you're good. Or you can split the difference. Have a partial stop down here, have a partial stop up here, or simply not have a stop at all because it's a long-term position and you're pretty confident that you're not going to wake up one morning and see NVIDIA down 20%. Okay, so might as well go through the others. So I mentioned on Fox that I like the M&M gang. Not the candy, though. I like that too, the peanut ones. So Microsoft and Meta are working really well. So we got into this on the breakout. This is a pretty good entry I mean, if I had seen it, would have been nice to have caught it initially, but I just wasn't looking at it here. But to be buying it, this was on the 9th, so this is the 8th. To be buying it the next day, that's still pretty good too. So this was an okay entry, not as good as the first up day, but still up at a level that gives you a very, very low risk, meaning that your potential reward relative to your risk, your R value, is good. So anyway, and Meta, this just stock continues to trend. Think about what I did a minute ago where I just erased the price action. You got the same thing. 250, 20, 8, they're all trending higher. You see the higher lows and higher highs in the Bollinger Bands. This is exactly what you want. Exactly what you want to see. Now, Google, this is it's a little choppy. And it's still in consolidation. We're up a teeny tiny amount. I think you're going to have to be patient with this, and the trend is higher, but earnings are right around the corner too, in a couple weeks. So you got to be aware of that. This is probably, if I had it to do over again, and isn't that always nice? I probably wouldn't have put this trade on. It's profitable, but it's kind of a little bit of a time waster, is the way I look at it. And then Parsons caught this right. And this is the thing. I'm glad I kept a looser stop, because you're buying it here at 64.50, then it gaps up the next day, and it's like, oh crap, this is a total failed breakout. I saw this and I was thinking, oh crap, this is a total failed breakout. But then in the very next second, I looked at it and I said, no, it's fine. It's a very thin stock. So maybe somebody just sold into this, but I just decided, hey, stop is the stop. So there it is. And then the following 2 days, it's back up. So it's fine. It's just a random trade. Shark Ninja, we were stopped out of this, and I'm glad we were. It looks like it's rolling over. And then finally, SMCI, we're kind of right where we're in at 324. So it's down just a little bit, and that's fine. But I think this is going to take a while to break through this base. I thought this was the breakout, and maybe it ultimately is, but at this point, it's not. It's not doing much. We'll put it that way. So then other stocks to look at, and I know I've been going on for a while here. The home builders, not at a good entry. By the way, what was I going to point you to? Um, I can't remember that. I'll have to come back. to this at another time. But these moving averages are getting wider apart. And so when this starts to happen, especially when the 50 gets steeper, you have to start looking at the price action with a little bit of a jaundiced eye and think, okay, well, it looks really good, but it sure is extended. So maybe I want to shy away from this stuff. Lennar, I would put in this position too. If you're buying it right now, oh, it's trending higher. You're expecting it to do this. I think that's not a realistic expectation. I think the stock's just going to stagnate a bit here. So, see, other than that, one thing I'll mention a couple things here. Okay, Comfort Systems. This is another one that you just want to watch. You don't want to buy it here. If you like the stock, then wait for it to hit or test the 50-day moving average again. This is what I wanted to show you with CrowdStrike. Note how just look at the 50-day moving average in isolation. Forget about all the other stuff. Notice how this thing, it was at this slope right here. And then on this gap up, the slope started to steepen. You can see the break right there. When it does that, it signifies a strengthening uptrend. That's a good thing. We like that. However, when it does that, it also ultimately gets you closer to where the stock's gonna stop going up and will either consolidate sideways or pull back quite a bit. And it's because the only reason a 50-day moving average is going to move higher in a steepening way is because buyers are anxious. They're not being patient. They're just pushing the stock higher and higher. And that impatient, impulsive money is always the poorly capitalized money. It's the chasers. So just this a little kind of a trick here. It's just something to keep in mind. Like I said, trading really isn't that hard. It's everything else that goes into it that's the real difficult part. So I'm just kind of giving you a few things to be mindful of here and there. So, okay, that's all I have for you. And Scott, thanks for covering for me the last couple of days. Our goal is to have typically I'll do 3 videos. Scott does 2 videos a week for Stock Market Mentor. That's how I like this to work. Because I like doing this stuff too. But Scott covered for me yesterday and the day before on this holiday shortened weekend. So here I am, and you're going to get me again tomorrow. So I'll see you then.